Hi guys, it's Ian from Signal Centre. It is Monday the 25th of November 2019. In this video report I'm going to discuss the FX majors, also the dollar index, basically highlighting what patterns and what we're expecting to happen this week. I think this week there's going to be a real emphasis again on the dollar index. That's a driving force behind most of these dollar majors. We saw an uptick on Friday. And I think really technically there's no clear indication that that strength in the dollar index is not going to continue. So let's get to the charts. The first one we are going to start off with is the dollar index. I'm going to sort of look at the monthly chart to start with, because I think this key to highlighting the long-term bias. I love this candle here. So in October, we posted a bearish outside candle, also known on a monthly chart as an acute monthly reversal formation. So that offers a long-term bearish bias, as far as I'm concerned, for the dollar index. But I still believe that the correction higher is going to be stronger. If you note here, this level, 98.37, was very close to the Marabuzo level. That's the midpoint from the open and the close of that very bearish candle. And it was an area that had been pivotal. So although we did react lower from that level, I now think we're probably going to break it towards the end of the month. So just going down into this time frame, this is the daily chart. That is an impulsive move. We stopped short of a 261.8% fib level, which I was aiming for a reversal. We then posted a double bottom formation. We broke it. We went up to that 98.37 level, and as you can see, we moved to the downside. But I think as far as Elliott wave's concerned, I look at wave formations. I'm not enthusiastic, or I'm not obsessed with them, if you like, but I do like to look at different patterns, especially if they line up with other formations. So this, I believe, as far as Elliott wave is concerned, would be 1, 2, 3, 4 down in 5 with a fifth wave extension. This would be AB, BC, CD moving to the upside. Now, what can we see bigger picture? Let's get rid of this for a second. If we just look at highs and lows, we could potentially form a bearish head and shoulders pattern here. So if we go up here, bosh, this sort of being around the neckline, head, are we going to move up to here to form a right shoulder? Now, if we go to this chart, and this is the 4-hour chart, okay, so that's that right shoulder, or potentially around about 99.10. If we put a fib on here, extension, we've just stalled at 161.8% overnight. So again, no clear indication. I think we're starting to get up towards these levels, 98.62, 98.69. That's a 61.8 fib. We're going to have to be very cautious on further dollar buying, but then probably dips being bought into. This is the real area up here for looking at selling dollars, basically. So reflecting that back, or all of that back, onto the FX majors. Let's look at this chart first. This is the daily chart on euro dollar. So a decent reaction up from the 61.8% fib. Had a bullish outside day. That candle often indicates the end of a trend and the start of a new upward bias. But we reversed that candle formation on the 21st of November. Now that strong sell-off on Friday after Lagarde's speech actually indicates that I think we're going to see further losses. Again, prime support is down here. We've got 109.52 as some bespoke support. We've got 109.43 as a 78.6% fib. So we're sort of flipping the dollar index on its head to obviously get the reverse formation for euro dollar. If we go to this chart, which is the 60-minute chart, we tried to get short here this morning, but we actually look like we've reversed quite strongly from our first bespoke resistance level. So again, wave 1, wave 2, 3, 4, and then down in 5, being wary of this area here. I haven't got my glasses on. 109.85, 109.80, but really for buying euro dollar, I believe we could see it further all the way down to around about 109.50. So 109.80, 109.50, I'm seeing support. I think intraday rallies are still going to be sold into. Cable, now I've gone short of this morning. The daily chart, let's move my face out of the way. You've got this pretty mixed and volatile trading. In fact, if we go to that measuring tool, got about 26 days where sterling dollar's gone sideways, and that's caused the RSI. Everybody's looking for trend indicators like the RSI, stochastics, crossovers, MACDs. They're just going to get chopped around in that range as it continues to go sideways. But a nice impulsive move to the downside yesterday. This is really important, this level here, 128.85, because it was support. It then becomes resistance, and we actually got short this morning at 128.75. Now there is a DMARC 13 count to the upside. It's on a short time frame. It's on a 15-minute time frame, and that gives a projected stop loss at 128.94. So just under 20 tick stop loss for what could be quite a decent risk-reward trade. The 261.8% fib is located at 127.28, and I've also got some bespoke support down there. So I'm really keen. I'm keen. I'm really quite bearish on sterling dollar, but it really does need to hold around about current levels. Dollar Swiss, and again broke the triangle formation to the upside. That's the daily chart. Again, we've seen a prolonged period of mixed trading of 37 days where we've seen that basically for that formation form, if you like. Now it's broken to the upside. What was resistance now becomes support, so that's at 99.55. If we go to this time frame, we look like we're just stalling, similar to the dollar index at the 161.8% fib level. I've got numerous support levels down here, but I think they might be a bit too deep to get triggered today. 99.50 and 99.44 are prime support, and of course we've got a 23.6% pullback level there at 99.59. So again, still looking to buy into potential dollar dips, but I thought we might get a deeper dip. A deeper dip, a song in there somewhere, on dollar Swiss. Dollar yen, messy old chart. Look at these last 4 or 5 days of price action. Not inside days, but spikes in both directions. We had some good news overnight with regards to stocks. The Security Secretary, I believe he's called, from the US, Robert O'Brien, highlighted that he thought there was still scope for the Trump-China trade deal to go through before the end of the year, and that's quite buoyant for stocks. And because it was buoyant for stocks, we've seen a move to the upside in dollar yen. We've broken a resistance level. I'm looking at that resistance level to act as support now and try and get long of dollar yen, but it is only corrective as far as I'm concerned. Well, I think 108.75 is quite decent support today, but if we look to this chart, I'm still looking at this level to get short. So again, an impulse move to the downside, pretty choppy move higher. If we put a channel on there, where are you, channel? That just looked corrective. Prime resistance is at 109.25. Get rid of that because I'm not particularly keen on channels anyway. Dollar CAD trying to get long today at 132.70. Again, if we look to the daily chart, a bit messy. Lots of big spoke resistance levels, but what I like is 1, 2. It was quite messy in the middle here, got chopped around a bit, up to a 161.8% fib. Got 2 levels of support to the downside today, 132.70, 132.67. when we get them tight like that, it normally means that they're stronger. I think up here is going to be the target level, so just breaking that wedge formation. 134.77 is a 261.8% fib, and then we've got some bespoke support at 134.67. Going back to a shorter time frame, a bit messy. There's the 161.8%. We overextended, and it's really here that I want to get long, but again, has the dollar already run away with me, from me, I should say, because I'm not with it at the moment. I cashed in my euro dollar short late on Friday. Aussie dollar. What time frame do we go to first on this one? I suppose the daily. This, and again, it's a nice formation. We've got a wedge pattern. Okay, so it's broken out the wedge. This previous support lines up with the target wedge, which is around about 0.6750. If I go to this chart, which is 24 minutes, 4-hour chart, we've seen a gap open that looks like it's going to try and close. We're actually trying to sell at higher levels today. We're trying to sell around about 68.21, and again, you know, that's our prime short area. We might not get there, and the dollar or the US dollar rally might run away from us. In fact, we've actually not closed the gap, but we nearly closed the gap overnight. Euro sterling has gone. Daily chart, really got to look at the big picture in this one. Impulsive, mild corrective, impulsive. I know we've consolidated for quite a long time, but every time we get rallies, they're just getting sold into. You've got a fib down there at 84.53. That's close to a bespoke support at 84.70. So again, I think rallies just getting sold into. We looked at trying to get short at this level this morning. That last pullback reacted quite nicely near the 61.8% fib. I didn't have a full trigger there. I only had an 11 count on D mark. I'm looking for 13s, and again, it's just pushed lower without me jumping on that wave. Euro yen, chopping me about a bit. I did go long late on Friday. I then came out for a 5-tick profit this morning on that rally, and then I'm sort of, to be perfectly honest, I'm confused what to do next. Long term, I like it higher, but I like it higher from around about here, 118.67. Wave counts, etc. There's nothing really to go at the moment. I mean, intraday, because I didn't really have a stance this morning, I was actually looking, and that impulse move overnight looked quite aggressive. I wasn't quite sure how aggressive the sell-off in euro dollar was going to be, so we're actually looking to, we've got higher highs and higher lows, so we're looking to break that sequence and looking for a break of lower highs and lower lows. So we're actually looking to sell in a break today for a possible move down towards 118.70. But I would say out of all the FX majors, it's probably the cross that holds the weakest signals going into this week. Okay, guys, hope you enjoyed that analysis. Be back again soon with some more. Thanks.